Newly listed Dulux Group is eyeing strong profit growth next year. The company was only spun out of Orica in July, so the net profit of $61 million doesn't represent a complete financial year. But Dulux is banking on a pickup in consumer sentiment and a push into Asia for further revenue growth in 2011. Here's Alicia Barry.
Dulux is one of Australia's best-known paint brands, and this was its first set of standalone results, one that had Chief Executive Patrick Houlihan brimming with enthusiasm.
Delighted about it to have gone through the demerger from Orica only 4 months ago in mid-July and to deliver results that are not only a record result in year-on-year, but to do it in that environment is very pleasing.
That environment was one of sluggish housing construction and cautious consumers, but it didn't take too much of the gloss off the result. Earnings from paints domestically were up 6%. The Selleys and Yates business pulled in over 3.5% more in the period. But the New Zealand Paints division took a hit from foreign exchange conversions on the high Australian dollar.
The result that they've come out with, the $61 million, certainly highlights the defensive qualities of this sort of stock. It's not actually dependent on whether the housing market's up or down. You know, when it's a down market, the people are out there renovating and still buying paints, and when it's an up market, there's more business on offer.
It wouldn't say by how much, but Dulux increased its 40% share of the domestic market in the period, putting the growth down to strong brand awareness. That dominance has made it difficult for new entrants. Japan's Nippon Paints is withdrawing from Australia after just 2 years. But the competition landscape could change, with US giant Valspar set to try its luck after purchasing rival Wattle.
I think the Dulux brand is strong enough to withstand that competition. One of the interesting aspects of the result today was their margins, which actually held up very well.
The results don't reflect the entire financial year, but certainly set the scene for the next 12 months. The company expects good profit growth going into 2011. To achieve this, it's looking beyond a pickup in economic conditions in its Australian and New Zealand markets, but offshore to Asia.
The work we're doing at this stage is to look to establish targeted specific positions, and in that regard we bought a leading wood care business in Shanghai 2 years ago, and on top of that now we are layering our Selleys products and our interior and exterior paint products. So we're really combining our capabilities around brand marketing, technology, customer relationships with the distribution footprint we've brought there.
But he won't disclose any targets for the region. As for acquisitions, it seems they are on the radar.
There are certainly businesses we can acquire and bolt into that business, but we are looking for businesses domestically that are very close to the existing business we've got.
There had been talk ahead of its listing that Dulux could become a takeover target if its share price underperformed.
Any talk of takeovers is probably a little bit premature at this time. I would think that Dulux as a standalone entity will probably need to prove themselves. The share price, it may underperform, especially in a market that at the moment is focused in other areas such as resources and mining services. But having said that, I think there would have to be some very marked underperformance before anyone had a really good look at it.
Despite the promise of a 3-cent final dividend, the stock finished flat after posting earlier gains. Analysts say investors may have been distracted by a more explosive Orica result.